So many questions I get was whether do I see gold going up or do I see gold going down after COVID-19 is over. Right now, gold is actually at 1,730, 1,750, roughly around that range. And when COVID-19 hit, the Dow Jones Index, which is actually the US major index, it dropped from 29,000 all the way to 18,000. It's a drop of a total of roughly 38%, and gold actually dropped from 1,700 to 1,400, and it's a drop of 15%. That was when COVID-19 hit. So that means from the peak of the year, that means peak of 2020, it dropped that much. But as of now, the Dow Jones Index has already recovered actually, including gold as well. But Dow Jones Index did not recover as much as gold. Remember, Dow Jones Index drops 38%, but now it only recovered 29%, so you still have another 11% to go. But gold actually recovered further, and it actually shot through its previous, the whole 2020 high point. So this is what currently the whole Dow Jones Index and gold is performing. But why is gold going up and Dow Jones Index basically haven't recovered? Because of this so-called flight to safe haven. So where do I think gold might be heading to? I do believe gold will be heading to new highs. The previous all-time high is around 1,900, and now we are at 1,750, 1,730, something like this. But after COVID-19 is over, I do see that this whole 1,700 point, it will go to maybe up to 1,800 or even 1,900. Not in the shortest term, but maybe over a period of time like 1 year or something like this. Why do I think so? Because, like I said, flight to safe haven. Gold has always been globally recognized as this safe haven, where, let's say, if any economy were to crumble, gold will never crumble because they have this so-called value. And when it goes higher and higher, why basically people are buying and then they are just hoping that their currency will be protected or something like this. But one of the main reasons why I see it will reach new highs is because countries worldwide are now stacking out on debt. Like I mentioned earlier, where these countries, some of them are actually having this QE policy now. US is having one of the most aggressive QE policy at this time, followed by Japan as well. So every single country is stacking out on debt, where of course US is leading it. But people like, I believe more of us here are from Malaysia and some of us are from Singapore. But we are not exception as well. We also have been stacking out on debt. And Malaysia, I don't think is, we are not only stacking out on debt, but we are also basically heavily, I'm sure many of us also do agree that we are heavily on this political scandal thing for the longest time or so. So when countries start to stack on debt, your currency value basically will keep going down. And as currency value start going down, basically like I mentioned before, so it's like inflation of your prices everywhere in the whole country. And gold is basically an inflation hedge. Because let's, for example, if let's say stagflation happen and eventually turn into hyperinflation, hopefully no country go into hyperinflation this round. But if let's say we do go into a hyperinflation, let's say another economy were to hit hyperinflation, their currency value will basically reach zero. So that is how bad it will happen, like Zimbabwe. Zimbabwe is actually the perfect example of what happened. It went from stagflation into hyperinflation. So in the past 5 years, 10 years like this, so Zimbabwe is the only country that ever been there so far. And gold is basically like an inflation hedge. So if let's say before this whole stagflation and whole hyperinflation thing happened, someone from Zimbabwe actually converted their currency into gold. When Zimbabwe dollar actually went, the value of Zimbabwe dollar reached zero, at least they still have gold. So they're actually protected. Unless, well, of course, if let's say the whole US crumble. But US, the thought of US crumbling down into basically zero is really, really quite impossible, because US around the world is the heaviest debtor in the world basically. So no countries, I think, will want US to drop into zero, because basically US owe them money. And Yeah, so the whole thought of this US going to basically crumble into zero is just highly unlikely. That's why gold probably will reach new high. But previously, at the previous recession, where it happened in 2008, and gold hitting 1,900 and then it dropped all the way back down to 1,100, 1,200. For me personally, if gold were to retrace back, I highly doubt gold will ever reach into the 1,100, 1,200 zone ever again. Like I said, countries around the world will infinitely stack out on debt as QE policy just keep continuing on. QE policy is not the nicest thing to do in the economy. It will keep your company your whole country afloat, but it's not the best thing. And there's no one I would say could 100% say as to what extent the effect of QE policy. So that's why gold in future, I think the whole new norm of gold at the lowest, I think it will go up to 1,500, 1,600. That will be the new norm, but it will keep heading high as COVID-19 basically is over. That's basically how I see this whole COVID-19 thing playing out. So, like I mentioned again, just to recap a bit, recession we are definitely in already. Depression, highly unlikely, I think. Certain countries may have a more severe effect of a recession, and certain countries won't. It depends, like I said, on how well the governments and central banks play out their policy. Then the next thing we have inflation versus stagflation, and I think worldwide economies, I think, will definitely enter into stagflation rather than inflation. And for gold, I get the question a lot, whether it's a good time to buy gold, this and that. Well, I do think that gold is a very, very good time to buy. Just don't collect it all at one shot. But I think it will hit higher as time goes by. With this whole QE policy, I do think it will hit higher. So this is basically my whole view on this whole COVID-19 situation. Are there any questions? You guys can type in the chat and all, then I will respond there. I do think gold will possibly break. So there was someone asking, do I think that gold will break its previous high? I do possibly think that gold will break its previous high. It's just a matter of time, basically. The whole QE story of what the whole federal government of US, even Bank of Japan, basically if you read the news, I think yesterday, or is it 2 days ago, Bank of Japan released yet another buying of bonds. And this whole QE thing, I think is really unsustainable if you ask me. Why do I say so? If you actually watched US index at the start of April, you can see at the start of April, basically we have all this employment data coming out, and none of the employment data coming out was good. It actually people were already estimating that it will actually go down. But I mean, the whole employment basically will become worse, but it was worse than what people expected. It misestimated very badly. But you can see that the economy, basically the whole US index didn't even react to it. It continued going up because of how the US federal government is actually pumping out all this QE policy and buying of bonds basically to sustain their whole index. But as to a certain point, I do feel that QE policy will be unsustainable as COVID-19 keep continuing on. As long as COVID-19 has no vaccine, I do believe the QE policy will eventually run out of steam. That's how I see this whole QE policy. And when QE policy runs out of steam, gold will definitely shoot up because there's no other place where people can go. US index, once QE policy is gone, the US index will definitely drop. And when US index drop, no other place where they can buy. So they have to buy. I mean, people will definitely hedge with gold. That's how I see gold reaching its previous high of 1,900. So there's another person asking, regarding speculation, what do you think will prevent such an event, or is it inevitable? I do think it's inevitable. I don't think any one of us could prevent such an event. Like I said, unemployment will definitely happen. Right now, with governments worldwide having these cash payments to sustain companies. So how government policies actually are right now, right? many government are actually having cash payments to companies on the condition that companies do not lay off their staff. I'm sure many of us also would have read this on the news, but basically that was the only condition that governments will basically hand out these cash payments to companies. But once COVID-19 is over and these cash payments are no longer given to companies, eventually companies will then only realize that, oh, okay, now I'm basically down by how much, because don't forget, you only give cash payments to companies to sustain the staff. What about rental? What about whatever storage costs you have, this and that? So a lot of things companies will not know until economies reopen. When economies reopen at time, then you will see that there will be a sudden surge of companies that eventually declare bankrupt, because then only without cash payments to sustain their staff, then companies can only evaluate properly to what extent how badly damaged they are. So when there's a surge of this whole unemployment thing, like I mentioned earlier, then tax will start to come in again. People have to pass the tax to someone actually. If you increase tax on the company, basically on the tax on their products, this and that, they will have to pass that tax pressure to someone else. So they will pass it on to consumers. So inflation will generally just rise to everywhere. And those companies shutting down be it normal companies or even manufacturers for the matter, so GDP will definitely drop. When GDP drop, then inflation, this and that, so stagflation will definitely have to occur. Some countries will get it better, and some countries will get it worse. Smaller countries, basically like third world countries, I would say. So I believe third world countries are the most heavily affected because we do not have the luxury of this whole QE process, not like what US federal government is doing, or even like Bank of Japan, what they're doing. So third world countries, or just developing countries, you say, developing countries will not have that kind of luxury of this QE printing. So if this whole stagflation occur, I think developing countries will get hit the hardest. But I do believe it's inevitable. None of us can prevent such an event. So that's how I see stagflation occurring. Someone asked whether will governments move towards universal basic income. I highly doubt it. I honestly highly doubt this whole universal basic income thing. Developed economies might, but developing economies like Malaysia, highly unlikely, because there will be some things like I mentioned again, the whole government budget, right, is not as simple as to have this whole universal basic income kind of policy implemented. Let's just take an example, minimum wage. Minimum wage, I think, for the past 5 years, I think Malaysia actually increased it once, and that itself, companies, I think, across Malaysia, I think many actually had protest against it. So you want to have this so-called universal basic income thing, I do believe governments are not capable of handling such a policy, because I do think it's not possible to have this basically, because governments, they will not have the money for it. Okay, so another person asking, how do you see about the future of oil price become negative? Okay, so I think I got this a lot throughout this whole week when people are sending me messages across saying that, oh, now oil price is negative. Oil price is actually not negative. If you have traded futures contracts before, what actually happened is there is no such thing as having one contract indefinitely forever. Contracts do expire across every month. So for this case of oil, right, the contract expiring was the May contract. And why it went into negative and deviate far away from the next month's contract basically is because no one wanted to hold this month's contract. And for another fact was, if you actually watch the volume of this month's May contract ending, right, there was very low volume of what happened actually. So basically, the ones who were throwing down one was just a bit on it. They just required a bit to just throw it down, because every single volume actually pushed towards the next month's contract, which was June. So now we're effectively in the June oil futures contract. Is very different from I know, because many of us here, I think, who are in this webinar are trading CFD actually. So CFD is very, very different from futures contract. There's a cost of basically this thing called rollover contracts. So if you traded real future contracts, then you'll get it. So you have to roll over from, let's say, a May contract to June contract in order to keep your whole balance sheet basically more or less the same. And every countries around the world every banks around the world who holds future contracts, they'll have to do a rollover. Let's put example Hong Kong. Hong Kong Hang Seng Index, right? For a bank to roll over their Hang Seng Index future contract, they have to do it latest by the second last trading day of the month. So like example, let's say this month the second last trading day will be on Wednesday, which is next week. So by Wednesday next week, every single bank who is holding Hang Seng Index contract futures, they have to roll over to the following month, which is the May contract, May Hang Seng Index futures contract. So for oil, it's the same story. Actually, when it was going to expire at that time, basically every single person already re-rolled over their futures contracts to the next month already. It was only those balance who have not re-rolled their contracts, and they refused to. Basically, the difference between holding a futures oil contract and holding a index futures contract is the delivery thing. It's the physical delivery. If you hold a futures oil contract towards the expiry, you have to deliver. So some people who didn't re-roll their contract towards the next month one, they thought that, okay lah, basically I'll either deliver or I receive delivery. But of current time, with COVID-19 situation, no one would want to take delivery, because basically their whole storage system is already at its peak already. They have no storage anymore to store any additional oil barrel anymore. But it's actually, I wouldn't say it's the price of oil is negative. It's not. It's just the futures contract just went negative, because it's, let's say for example, now I was supposed to deliver out something for, let's say, $20 a barrel. You give me $20 a barrel, I'll give you the oil. But right now, nobody wants to buy oil, and I on one hand thought that, okay, someone will actually buy the $20 barrel, and I was holding the contract, and I refused to re-roll over to the next month's contract, so I held it. When nobody wanted it, so you just went to negative. So now I have to pay people to basically take the oil away from my hands, because I have zero storage facility anymore. But this whole future oil price becoming negative is, I don't think it will ever go into, it won't go negative, but I won't even think it will go to zero. Because if oil price were to ever go zero, there will be a lot of economies around the world that will get affected. Major one of it definitely is Russia, and another one is basically all the OPEC countries, and another one will be Canada. Canada is a country that's very heavily relied on all this crude oil, and you can see when crude oil start dropping, Canadian dollar actually drop together. So it's not future oil price is negative, like just so happen the May contract price is negative, that's all. But I don't think it will even go to zero, because, well, it's economies that will be affected. And this whole OPEC thing, Dubai, Russia, it's a whole cartel basically. To me, I think it's more like, if you actually know Aramco, the oil company that went IPO, one of the biggest IPO in the whole world, they actually managed to do it right when before oil actually started crashing down like now like this. So for me, I think it's basically this whole cartel planning it out very, very well. So I don't think they will make it into zero. The May contract going to negative one, well, like I said, it's just some people thought that, okay lah, I'm going to deliver my oil, so I'm just going to hold it and not re-roll over. That's actually what happened. That's why the futures contract went into negative, but oil price is not negative actually, contrary to what everyone is actually thinking. Yeah, no problem. How long will you expect this stagflation to last, and how bad will it impact the stock market? Okay, for stagflation to happen, right, it's basically, it will depend on whether we will eventually reach into hyperinflation. So either is go from stagflation back into inflation or stagflation back into hyperinflation. There's two routes out of this stagflation situation only. But if let's say the situation where stagflation goes into inflation, if let's say we were in a developing country, like where I think most of us here are in Malaysia, I think it will last probably around 2-3 years before the whole thing actually start to calm down, this and that. That's how I think this stagflation, how long it will last. But for it to, whether it will go into inflation or go into hyperinflation, I have basically no clue. But if let's say we go into normal inflation, then well, the impact on stock market will be as normal. Stagflation happen, then stock market will drop. But once it changes into inflation slowly, basically when it changes into inflation, it's basically a good thing for us because it just means that your economy is doing better. So stock market will definitely go back up. But if we ever so unlucky go into hyperinflation, like what happened to Zimbabwe, then stock market will no longer be a thing anymore in that country because your whole country is basically valued at close to zero. Yeah, that's how long I think stagflation will last. So basically 2-3 years, and how impact is whether we will eventually go into inflation or we will go into hyperinflation. This route I will not know until it further down the road. Basically when governments around the world start to come out with their budgets, then you will get to see where we are. That's how I see this this answer. No problem. The problem with all this whole stagflation is that it's easy to tell when an economy is going to inflation, but it's very hard to tell whether an economy is going to stagflation. That's the bad part about this whole stagflation situation. That's why you will rarely hear people call out a stagflation economy until much later. When whole stagflation is over and done with already, then only people come out and say, oh, we were in stagflation. Yeah. But inflation is easy for everyone to say. We will just end the webinar here. So thank you all for attending this webinar and taking your time, your 1 hour time, and listening to this webinar. So I will see you in the next webinar then.